gold. You nailed the summer and fall breakout almost to perfection. What's the chart telling you today?
I mean, we're in a perfect environment for gold and all precious metals to shine. That's what gold has been warning us a long time. When gold outperforms the stock market or keeps up and moves up with it, there's something big and bad brewing that is going to eventually hit the market, and we don't know what it is. Potentially, gold could make this run in the next 2 to 3 months. So if people are selling their stocks because they're scared, they're going to dump it into precious metals. And so I think we're going to see very similar to 2007 as the stock market starts to sell off. All that money is going to come out of equities, which is a massive market, tons of money, and it's going to get jammed into a tiny precious metals complex. The big thing people need to understand, and most people aren't going to like to hear this, is I also think it's the last major run in precious metals before we go into a much bigger reset that could take several years to come back to the highs. And this last push will be the one that sucks everybody into the precious metal space who's not in, who's open to getting into it, and it's going to create this huge parabolic move to the upside.
Hey everyone, this podcast is not investment advice, and I'm certainly not a financial advisor. Just a guy who spends too much time reading about markets. Before investing, do your own research, talk to a licensed advisor, and remember, risk is part of the game. All right, welcome back to another Pinnacle Digest pod. We've lived through one of the wildest years in recent market history, a major crash after Liberation Day, followed by a pretty epic rally into late spring. I think it's been a year where fear, greed, and volatility all spiked kind of at different times. We had gold go vertical, silver blew through pretty much every resistance level. Bitcoin sprinted past 6 figures, then cratered. It's been a pretty chaotic year and even euphoric at times as well. So back in July, we had Chris Vermeulen, founder of the Technical Traders, on the pod. And at that time, he told us gold was probably heading toward $4,100 when it was around 3,400. It blasted past 4,300 not shortly after he was on. He said silver could run to 48 when it was at about $39. It ripped to 60. He called for Bitcoin to push toward 136K when it traded around 115K. It tagged about 125 before, as we all know, it kind of crashed. So as we wrap up a year where fear, sentiment, and probably our own biases shaped a lot of investment decisions, I wanted to bring Chris back on to get his technical read on what's happening now and what may be coming next. Chris, it's great to have you back on, man. Let's start with the big one that our audience and myself all want to know about: gold. You nailed the summer and fall breakout almost to perfection. What's the chart telling you today?
Yeah, there's a lot going on with gold. It's pretty exciting, and I can share my charts on that. Let me pull it up because there's some interesting waves unfolding in the gold space here. So let me just pull up the chart. So I mean, yeah, it's been a pretty epic year for anybody in precious metals. I mean, it's been pretty good since really 2019. We've been seeing gold move higher for years. It really has been sprinting up this year. There's still a lot of upside potential, I think, in both gold and silver. And, you know, if we were to just kind of zoom back, I'll actually flip to the weekly chart because it gives us a nice view. So if we take a look at gold, all of these moves. So gold's been making a series of 20% moves over and over again. It makes a bull flag, it pauses, it makes these, repeated 20% moves and goes into these pauses. And of course, we're back into another 20+% move. It's been stair-stepping its way higher. I've been talking about gold for years, watching all of these unfold. Every time one of these new steps are formed, it allows us to project forward where the next step should be based on technical analysis. Using Fibonacci extension gives us a very accurate tool. And so gold's just been working its way higher. Now, sometimes it takes, months and months to digest a move. Other times it only takes a few months and then it starts to head up again. But when we take a look and zoom in on gold's current chart right here, we can use Fibonacci to get an idea of where the next major upside move is. And it tells us based on the lowest low from the previous flag to the high, and then we come down to this recent pullback, and this will tell us where gold should move to over the next little bit. And that is about $4,685 up to about $5,100, $5,200. That's the next upside target. And surprising enough, where gold is, if you draw it back up, it's another 20+% move. So gold is just in this limbo mode, waiting for a breakout. And silver, I'll touch on shortly here, but silver's already started that breakout. It's starting that move. And so it's really exciting. I mean, gold has been a big, slow grind higher for years, but it's a rock solid investment. And the trends on all time frames are still pointing to higher pricing. The daily chart is pointing to higher pricing, the weekly, the monthly chart, quarterly charts, everything. So it's really exciting to be in the precious metal space. I hold physical metals. That's my main way of trading the precious metal space. And really just got to ride this trend. And I mean, we're in a perfect environment for gold and all precious metals to shine, to really do well, because people just don't trust systems. They don't trust the governments. They don't trust currencies. We got wars going on. I mean, there's just so much stuff. I mean, every year is a better story for precious metals to go higher. And I feel like we're getting to this major tipping point now. We got central banks loading up on physical gold and silver. That is not a good sign. It's a good sign for higher gold, but it's not a good sign for the economy, the government systems, because something's going to break. And that's what gold has been warning us a long time. When gold outperforms the stock market or keeps up and moves up with it, there's something big and bad brewing that is going to eventually hit the market. And we don't know what it is until it actually happens, but it is a huge warning sign. And precious metals are one of those assets that do well during this uncertainty and worry phase in the markets.
And so you have kind of a price range for gold of, I think it was 46.85 to kind of 5,100. Is that something that you could foresee in the near term, or is this over the course of the next 12, 18 months? What are the charts showing you?
Yeah, so this is a weekly chart. So potentially gold could make this run in the next 2 to 3 months. And I mean, that falls in line with, I don't know the name of the cycle, but these multiple cycles that go back, centuries, and there's multiple cycles within it. And 2026 is actually charted to be one of the years where there's going to be massive turmoil and chaos and bubbles in pricing, that it's a time to lock in profits. And that's more so acting around the stock market. And so what I think is going to happen is I think we're going to see the stock market stall out, and we're going to see the economy weaken in 2026. I think January could be a very big turnaround month. I think it's going to be a lot of selling next year in 2026. And I think a lot of selling in the stock market space all that cash is going to be raised, and it's going to look to go somewhere. And money chases returns. It's just typical emotional traders. Whatever's working is where more money is going to go. So if people are selling their stocks because they're scared, they're going to dump it into precious metals. And so I think we're going to see very similar to 2007, as the stock market starts to sell off, all that money is going to come out of equities, which is a massive market, tons of money, and it's going to get jammed into a tiny precious metals complex. The precious metal space isn't very big. So when you take massive outflows from the stock market and jam them into gold and silver and platinum and palladium and miners, we're going to see, I think, gold, the whole precious metal space do very well next year. But I think 2026, the stock market and the economy is going to get pretty ugly.
Yeah, I had Simon Hunt on a few weeks ago, and he was talking about, I think it's the Samuel Benner cycle, or some gentleman who created it in like the late 1800s. And it actually had 2026 as a year of a significant market correction. I think Simon's calling for like a 20 to 30% correction potentially.
Yeah.
You talked about the miners. Have you done any technical work on like the GDX, for example?
Yeah, if we take a look at the GDX, it has somewhat similar price action as gold in terms of we see a percentage rally up, a significant rally, like 40, 50%. Then we see another 40, 50%. If we go here, we're at another 40, 50%. So again, we're just seeing a series of rallies into pauses. And that's what, obviously they're more volatile. There's more potential in volatile assets. And so miners are building another launch pad, and they are pointing to, just based on really basic analysis here, they're pointing to another 40 to 50% move. And we could draw a Fibonacci target here on GDX for where those upside targets are. And we're looking at about $108 for GDX, which let's just see what percentage-wise that is. Well, from the current price, it's about 34%, but from the overall trend rally, it's going to probably be about 50 or so percent. Yeah. So that's the next move is about 100 and what I say there, 108 to the upside. So there's quite a bit of upside potential when it comes to, I think, the whole precious metals complex. If we have a similar move to what happened in 2007 in terms of price action, where we saw gold, silver, miners, platinum, and palladium, they all came to life. Volume picked up. It became, the complex that everybody wanted to move into. Based on that scenario, we're showing 50, 60% move across the board in like silver, platinum, and palladium. Gold, I think, could rally another 25 to 35%. Miners could rally another 30 to 50% as well. So there's a lot of things playing out that are pointing to obviously some big gains in this space. I think the big caveat, the big thing people need to understand, and most people aren't going to like to hear this, is I also think it's the last major run in precious metals before we go into a much bigger reset that could take several years to come back to the highs. And I'm actually looking to trim off my physical gold position potentially in 2 or 3 months if we do get this final big, what I think is a final big push, because based on all the sentiment and the money flows and how I track everything and the sentiment, this last push will be the one that sucks everybody into the precious metal space who's not in, who's open to getting into it. And it's going to create this huge parabolic move to the upside. And then we're going to have the bad news hit and all this stuff. The stock market could roll over. And then I think we're going to see selling pressure. So I think this is an opportunity. I think it's a trade for the precious metals space. But I also think there's going to be a time when you're going to want to be locking in gains, because if we do hit these targets, we've got all kinds of different time cycles coming into play. People are going to be feeling euphoric, like they know what they're doing and they're going to be rich and there's so much more upside potential. The next targets are like 8,000 and 10,000 for gold. Like people start reaching for the stars. Yeah. And usually when everybody it becomes a feeding frenzy, euphoric phase. That's usually right when it actually tops and catches most people off guard. And I think this next push is going to be that FOMO, that euphoric phase that happens just before a major market top. And actually a good chart of this is if we go to the market participant, their emotions. I believe we're going to have this big push up, this euphoric phase where everybody thinks they're a genius who's, bought and held it, and it's rocketing higher. And usually at that phase, we're going to just see a very sharp drop, and then we're going to go through a big financial reset. And it will pull precious metals down with it, I think. Most times for the initial big wave of selling in the equities market, and when the economy turns sour for a window of potentially 6 to 8 months, even the best investments, which could be gold and silver at that time, are still going to get hit and sold. Yeah. They might rebound and become resilient quickly, but they'll still get hit. So the whole precious metal space is very, very exciting because we're all in big profits. And I think there's one more big push, but I'm actually going to be looking to trim off some position and lock in gains because I think it'll be a little bit of a feeding frenzy, and we might get a big pullback and a bigger reset in the precious metal space that I think a lot of people don't want to think about or try to navigate.
The one issue, obviously I'm a gold bug and precious metal bull. The one issue with precious metals is if they do enter bear markets, more often than not, these bear markets are multi-years, sometimes decades long.
Yeah.
Are you looking at it as it could be a multi-year bear market after the next leg up, or just a significant pullback because everything else is going to correct significantly? In a world of rising deficits and currency dilution, many Americans are adding precious metals to their retirement accounts. And when it comes to physical gold and silver in an IRA, one thing matters above everything else: transparency. Unfortunately, the precious metals space is still full of hidden markups, confusing spreads, and fee structures most people never notice until it's too late. That's why so many US investors are turning to our sponsor of the pod, iTrust Capital. iTrust Capital offers fair, straightforward pricing over spot with zero storage fees. In a market where many dealers quietly gouge retail investors, that kind of transparency matters. iTrust also brings precious metals into the modern era. Using blockchain technology, iTrust lets you trade gold and silver 24/7, not just during banking hours. When the market moves, you can act. And if you prefer physical metal, iTrust Capital supports in-kind distributions, meaning you can receive real gold or silver from your IRA in whatever form you want. bars, coins, you name it. And for those who want exposure to crypto, iTrust lets you hold Bitcoin and Ethereum inside the same IRA as your metals. So if you're a US investor looking for a modern, transparent way to own gold, silver, or crypto inside a tax-advantaged IRA, use our link in the video description to get our partnership offer. A $100 funding bonus when you open and fund your account with iTrust Capital.
Yeah, I think it'll be a significant pullback. I mean, this is the weekly chart of gold. I think there's potential we could see gold have if we go up to about 5,200, I think gold could pull back about 30 to 40%, which brings it back down to, the low, 3,200, 3,300, somewhere in that range. And I do think it could take a year or two. I do think it'll be fairly resilient. I think it'll be fairly sharp, much like what happened in 2008. I think we could see that 30 to 40% pullback. It might take a year or two to recover and rebound. And then I think it's off to the races. So I think it'll be short lived, but I mean, that's a big haircut. If you can, I don't want to waste time in it, because what happens is if it's not just this little pullback, it could be this, as you said, exactly. and it takes forever to come back. I mean, look at the years, right? And that's the big thing with commodities. They go dormant for a long time, and eventually you just like give up on it. When you give up on it and close out those trades, that's when it comes to life again. You're like, I just sold those things.
No, it's not for the faint of heart, for sure. Okay, that's a good breakdown on gold. I want to jump into silver. It's had an unbelievable run this year, stealing the spotlight from gold, especially lately. What are the technicals saying now for silver?
Yeah, silver's obviously at all-time highs. It's already broken out. I'm going to drop back to the daily chart just because it gives us a nice view of the shorter term price charts. Obviously, we've had this pause, this kind of multi-month pause here, and now it's broken out. It's got this high momentum bull flag pattern, which is pointing to about $68 an ounce. And that could literally happen like in 3 or 4 days. This is if this pattern does pop and break to the upside, silver is going to have another explosive move, and it's a pretty significant gain. I mean, to get up to about 38, that'll be about a 17% move that could happen. In as we can see for silver, it happened really only in a few bars here last time. So there's a lot of explosive move built into silver. It's a very tiny market, and now that everybody has kind of got their eye on precious metals, people naturally look for what's the fastest moving thing so I can make the most money. And so silver is one of those. It's such a tiny market that when a lot of people focus and look at it and they dump money in at the same time, it moves fast. And so that's the benefit of silver, is if you can catch these moves, they're very explosive. So silver's got a lot of upside potential based on the charts. If we go and look at the weekly chart in the bigger picture, it's a little bit messier, harder to pick a target for it. I like to kind of follow gold for these targets. It kind of made a running correction to the upside. If we were to grab the Fibonacci levels based on a few of these patterns, we could say, well, based on this run up and this pullback, it almost doesn't matter which pattern I've grabbed. We've blown past those. We're at all-time highs. And, we can zoom into a chart and just grab this most recent low and this rally up and this pullback. And that tells us kind of where the next short-term target is, which is about 63. The one that gives us that 68 target is the daily chart. We really have to zoom into the short-term charts to get an idea of where silver could move. So if we were to just look at this recent pop in silver and this tight little pause, it's pointing right up into this 68, 69 level, which is about that 17, 18% move. So silver is not nearly as clean as gold. It never really has been. It's a much noisier chart, lots more volatility. It constantly makes some higher highs and then lower lows, and it's a really great way to chop you up and get you confused and stressed out. So I always like to look at gold as the barometer, as the tide of precious metals going up with gold, and then you really just kind of, invest in silver along with it, because they're kind of the same trade. It's just one's a little harder to read, so just use the big brother or the big sister gold as the dominant trend at play.
Why is it so much harder to read? Just because it's such a small market, or?
Yeah, I just find the charts really noisy. So you get big rallies and sell-offs. You get these wicks that are making some higher highs and lower lows. It generally it's more volatile. So naturally it's going to have more emotional traders because it has big pops and big drops. So it makes people more emotional. It creates waves of FOMO. If it's popping without you, you get in. And then when it flushes down and has a big sell-off, it creates panic. And so it just makes a noisy chart. And it's not as accurate for predicting like where the next targets are. Unless you have like very tight little daily patterns like this, you can nail it down fairly close. But when we zoom back, like if we just look back on this chart, I mean, it's all over the place. It made some lower lows. It kind of works and kind of squiggles its way back up. Whereas if we kind of look back at gold is kind of, it has a big run. It has a big pause. Like it has much bigger waves and tides, and silver is kind of, it pulls back. And so it's just a noisier chart. I like charts that are move more consistently. They're slower. They have cleaner chart patterns. And usually that means it needs to be a more stable or a bigger market. Gold is a bigger market. And it brings in a different batch of investors. People who, gold definitely I think has more people who want to just park something in gold and let it mature. They don't really care about the drops or the sell-offs too much because they believe in gold and they want something more stable. And whereas silver, people move in and out a little quicker because it's more volatile.
Speaking of a larger market, I wasn't going to jump into this, but I actually am very curious about it because I've been considering loading up on a few of the producers. How does oil look to you?
Yeah, let's take a look over at oil. So oil's down.
It seems like you've been bearish on oil for at least a year and a half.
I have. Well, it's been going,
rightly so. Yeah,
I mean, it's been going down for a couple of years. I mean, it's really struggling. If it's trying to find support, I still think we're going to be going lower. With our short term, like our sector trading strategy, we're actually long oil holders. I think there's potential for them to move higher over the next little bit. But overall, there's this really critical support level in crude oil around this 55, 56 area that if it breaks, I think we're going to be dropping down into the mid 40s very quickly. And I feel like there's something big brewing where bad news is going to hit, the stock market is going to sell off, oil is going to break down. It'll be something about the economy or something like that that's going to create, oil is going to get sold off because they think there's going to be slower, less demand. And of course, I think that's going to send gold higher. I think there's all the charts oil is a great barometer of kind of, I think, what's going to happen with the economy. It kind of leads the way in a lot of cases. So low oil and oil trending lower means I think the economy is slowing under the hood, or people are expecting it to. The big money is. And so lower oil is a sign that I think we're just waiting for some bad news to hit. And the stock market is frothy. I mean, it's not the strongest stock market. It's still in an uptrend, but it's very sector driven. Magnificent Seven are still doing most of the heavy lifting. If you look at microcap stocks, they're putting in a major double top from back in 2001. So are like small cap stocks, more or less. So the majority of stocks. You're talking
about, like, when you refer to small caps, you're talking about the Russell, or?
Like if we take a look at IWC, which is the microcap, it's kind of like the Russell 2000. It's just the next step down. So I'll just zoom back on this chart, and you can see we're putting in what looks to be a pretty massive, double top phase. We're right up into these tops. So the majority of stocks are slamming into resistance. And the Magnificent Seven now, when you look at all of them broken apart, Nvidia's in a downtrend. It does not look good. Apple's hitting all-time highs. The Magnificent Seven are all over the place. They used to be all together, all trending up or all trending down. Now they're all completely a mixed bag. So that is the kind of the thing that's fearing me the most in terms of the stock market. Whatever's been dragging it higher, the Mag Sevens, now half of them don't look that bullish, and they're starting to show signs of weakness. So once the Mag 7 breaks down, then the stock market's going to start to fall, and it creates fear. And the small caps I think small caps are hitting resistance. The small caps and micro caps, I think, are a good barometer of the majority of stocks. Like thousands and thousands of stocks aren't near all-time highs, or they're hitting all-time highs from years ago. And that is usually seen as a massive double top or resistance. And the Magnificent Seven is really weak. So I think it's just a matter of time now we're in this holiday bulge. When you look at seasonality wise for like the stock market and gold, if we pull up the seasonality chart, we're coming right into the middle of December. Generally, we're going to see stocks have a push higher into the end of the year. So I think we have one more little potential push, a little tailwind to help stocks go higher. And if we look at gold, this is right where gold starts to have another push up. And I think you still need to be bullish going into the end of the year. I think the stock market will top out probably January, February, maybe. And I think that's when precious metals are going to just get inundated with all kinds of fresh capital. And we can just see gold, silver, and everything really take off.
What do you have a take on copper? Just because we talked about oil, I think copper is a good economic barometer. Do you have anything?
No, I don't follow copper too much. I mean, copper's been drifting higher. I don't have a chart on it here, but the copper miners have been doing really well. I mean, if you look at the COPEX, it's a good, pretty much any stock that has the word mining in it has been doing very well. It doesn't matter if it's like XME, which is a base metal miners ETF, or copper miners. They've all been performing really well. Like the copper miners ETF has got this big bull flag pattern. I mean, it's pointing to dramatically higher pricing. Just looking at the chart, I haven't looked at this in a long time, but here's a 40, 50% move, 40, 50% move. These are bull flag patterns. So we could literally just throw the next upside move on here and get an idea for where that is percentage wise. That's another 30 or so, 40% move, depending if we go down to the low. So there's a lot of potential still, and anything that says mining is just going to get people's attention. And so, I think these stocks, they're actually leading the way in gold. They've already broken out from the high several weeks ago. And so they're actually outperforming it. I find it interesting. It's been doing very well. And XME is another one that if we take a look at it, it's been on fire. It's had a very sharp pullback. Now, it's not performing quite as well as the copper miners. The copper miners are actually leading the way in terms of which miners are the best ones to go. And copper's got so much attention recently. I'd have to take a look at silver miners. Let's take a look at SILJ real quick. So silver miners are doing a lot like the gold miners. They're right up at resistance. They got a tight bull flag. So I like the silver space because it has this tight pattern, and the silver miners as well have got this tight pattern ready to pop and run. And so do copper miners.
So, okay, let's jump into the next asset I wanted to chat about, Bitcoin.
Okay.
Obviously just had one of its biggest dollar value sell-offs ever after running to around 125K. It pretty much tanked. How does it look as we're heading into Q1 2026? Because this is a position I'm considering adding to, but
right.
I have my apprehension.
Yeah. So I feel like Bitcoin, based on the charts and the kind of sentiment that I pick up on it, I feel like this window right here that we're in right now, I believe it's very similar to this window, like right here. I think we're still into big volatility. I think it's kind of picking a bottom here. I kind of feel like this is a bear flag or a dead cat bounce. I think this is still going to shake people up and put a lot of fear as it breaks to some lower lows. If the stock market does sell off, I believe we'll probably see Bitcoin sell off. It'll be interesting to see if it eventually becomes a safe haven play where stocks sell off and everybody moves into Bitcoin and precious metals. But at this point, we still see this when the stock market struggles, we see Bitcoin move down. So I do think it's, if you're a long-term investor, it is down near a support level. I mean, we could look at this chart and say, okay, well, here's a potential, you could argue this could become a head and shoulders formation. So there could be a neckline through here that if it's broken, look out below because we'll be back down to like $50,000 or $40,000. But at this point, it's still bouncing its way higher. When we zoom out on the chart, you can see here, it's got a cycle low. Whoops. Let me grab that pencil here. It's got a cycle low. It's got a cycle low. It's got these cycle lows. So there's potential it could just keep bouncing higher. But right now it's in a short-term downtrend. I don't really like to buy stuff when it's in a downtrend. I'll let it find this bottom and then start to move higher and then confirm an uptrend and then get involved with it. And that's the way we've played it a few times. We played Bitcoin back right over here. It came down, put in this bottom. It started to break out and we played a move and got out. I think it was like right up here, or it was actually one of these highs. It was one of the measured move highs. We hit our first target and we moved aside and we're waiting for another opportunity for Bitcoin. So I don't like to get involved here. I like to get involved here. I want to jump on it when it's moving up. I don't care about buying low and trying to sell high. I want to buy something when it's in an uptrend and then eventually hopefully sell it higher or when that trend comes to an end. So this is where everybody gets all excited. right? It's easy to get excited here, but that to me is the gamble, because if it doesn't find a bottom, it's going to keep going lower. I'd rather let it find that bottom and then say, okay, well, I'm buying it now with a herd and stampede all buying with me and driving it higher. So the trend is your friend, right? So I wait for that. And it sucks because, you can identify and see these feel and look like bottoms, and you'll be like, I knew that was a bottom. Although we never really know until after the fact. So you always be like, I should have just bought it when I thought. But eventually you're going to do that once, and it's going to take years to recover, and you're going to ride out a roller coaster. So I would wait personally to get it on the upswing and be like, I didn't buy near the low, but at least I'm on the right side of the trend here.
Bitcoin, I mean, I'm kind of a buy and hold forever on this particular asset, not because I think it's bulletproof, just because to me, that's kind of the purpose of it. If it is going to turn into the proverbial digital gold, which it isn't yet. To me, it's still a hugely speculative asset. It kind of mirrors the NASDAQ, and it's a risk on kind of trade. How did you manage in the summer? Because when you came on in July, it was around 110, 115K. You said, yeah, maybe it can get to 136. It went up to, I think, 125, 126. Did you guys close out in the summer?
We did.
Shortly after?
Yeah, I'd have to look back. We closed out on either this spike. It literally hit our target, or it was one of these spikes. We closed out half of our position here. And then when it came down to our entry price, we closed out the rest. It didn't hit our second target, which was the 134, 135. We managed the position. It hit our first target, which is what we want. We always want to close first target. And that way, if it rolls over and dies, then we just lock the rest out at a break even, but we made a profit on the first half, and then we can reanalyze it later. And it never met our criteria. It made a higher high over here, but it never re-met our bullish criteria. It was actually a very weak price, moved up, but a lot of the technicals were saying, well, don't buy into this. This is like a false high. And of course, then the bottom fell out. And when you zoom back on Bitcoin, let me just go here. It's got this broadening formation, which are very dangerous. These higher highs, you got a series of lower lows, which means the gyrations or the volatility is getting bigger every time. And it always just makes a nominal new high, gets you bullish, and then puts you like for a roller coaster ride, and then makes a lower low. And then it goes up, makes a higher high, and then it makes a lower low. And so it just gets crazier and more risky. And they're called a megaphone pattern. And they generally resolve to the downside eventually. You just don't know how many zigs and zags there are, but your risk gets bigger, and eventually it's the bulls and bears struggling. And then eventually the market will weaken. People give up on it. They get tired of the noise of getting beaten up.
In a world of rising deficits and currency dilution, many Americans are adding precious metals to their retirement accounts. And when it comes to physical gold and silver in an IRA, one thing matters above everything else: transparency. Unfortunately, the precious metals space is still full of hidden markups, confusing spreads, and fee structures most people never notice until it's too late. That's why so many US investors are turning to our sponsor of the pod, iTrust Capital. iTrust Capital offers fair, straightforward pricing over spot with zero storage fees. In a market where many dealers quietly gouge retail investors, that kind of transparency matters. iTrust also brings precious metals into the modern era. Using blockchain technology, iTrust lets you trade gold and silver 24/7, not just during banking hours. When the market moves, you can act. And if you prefer physical metal, iTrust Capital supports in-kind distributions, meaning you can receive real gold or silver from your IRA in whatever form you want: bars, coins, you name it. And for those who want exposure to crypto, iTrust lets you hold Bitcoin and Ethereum inside the same IRA as your metals. So if you're a US investor looking for a modern, transparent way to own gold, silver, or crypto inside a tax-advantaged IRA, use our link in the video description to get our partnership offer: a $100 funding bonus when you open and fund your account with iTrust Capital.
So now it's just doing, now it's got to just do this. It's just got to prove itself. And then boom, it could be off to 135 after that. But you just got to kind of wait for that bottom to be found and a new trend to the upside confirmed.
Now, since we first chatted about a year and a half ago, you've been pretty, and I know things change and you're constantly monitoring the markets and your technical charts and so forth, but you've been pretty bearish on equities for quite some time. When we talked this past summer, I think you had largely moved to cash because you felt the risk simply just wasn't worth it.
Yeah.
Has anything changed for you when we're talking about the S&P here? Are stocks still kind of in a danger zone for longs, or is there any opportunity setting up here for the S&P?
Yeah, so we've been in and out of the market a few times. We got out over here, we got back in over here. I think we ended up moving to cash over here. I can't remember when you and I talked. We'd moved to cash. We got long. We played a move back up. We're back long the market now. So it wasn't like an exit where the market's topping, get out. It was simply the short-term trend ended. We had moved to cash. We've been long back in the market since then. But right now, the overall stock market trend is still to the upside. The long-term trends, all of that stuff are still pointing to higher pricing. The trends are still up. We're kind of in this consolidation phase, this pause. So, the market has been trading sideways here for a little bit. And we really need to see if it's going to get some traction and extend and push higher into the end of the year. I think we could see one more push and squeeze higher. There's a lot of uncertainty building in here, though. If we were to zoom back, what's happening right over here is actually very similar to what happened right over here before some bad news hit and the market sold off. So you get into this chop and this consolidation. And so this is one of the other reasons why I think we're very close to some bad news, because what was happening in here with the market internals, with about 12 different asset classes that we follow in different cycles at play, we have the same thing that happened over here just before the tariff news came in. So the charts are telling us bad news is about to drop. Something's going to hit, but I got a feeling it's going to be carried over into 2026, and then chaos is going to hit and the stock market will sell off. So we're getting into that time of year. We're going to start to see window dressing. We're going to start to see institutions who underperformed start to move into the assets that are performing the best. So at the end of the year, the best performing assets will probably get a bigger push higher. People need to be long equities. They need to be long in the precious metal space. So I think we're going to see investors or hedge funds or money managers start to buy into the markets and drive them higher again with their with some of their clients. So at the end of the year, when they give them their portfolio, even though they've underperformed, they'll be like, oh, I have all the same stuff everybody else has. I guess that's the norm, right? So that's one of the reasons why I think we see a lot of moves to the end of the year is people are in a good mood, and we see a lot of people moving in, chasing money into the end of the year for a lot of money managers to make it look like they've had all the best assets all year. And really, that's just the type of return you should expect. So that's kind of where we're at in terms of the market. But I'm worried about this market. I do feel like we are very close to a sell-off. And when you and I spoke, I've been bearish on the market for a long time, but just because I'm bearish doesn't mean we're not long equities. And that's, I think, the big disconnect is I'm always bearish. I'm always prepared that the market is about to drop. And I have a game plan that if it does, we can not only avoid it, but we can benefit from it. It's much like, when I was a kid taking young drivers, which is driving ed school, they teach you to scan the intersections, check your mirrors every 3 to 8 seconds or 5 to 10 seconds to make sure, there's something's not coming. And that's what I do with the markets. I'm constantly scanning it. I'm saying, this is broken. This is breaking down. This is losing momentum. This is showing signs that something bad is coming. And so it's almost like I'm driving through the stock market and all I see is chaos. It hasn't hit us on the road yet. And we're still going up the hill, but it's like, there's like, all kinds of stuff unfolding around us. And we just got to be ready to hit the brakes, turn around. And so that's why I always have this bearish outtake. You're way better to be expecting something bad and have a plan. So when it hits, you're like, we're good. Like we've been expecting this. Than to be hit blindsided and just be fully bullish all the time. So that's the way I see it. I always go at it as the market is trying to take my money. The second I'm in, I'm looking for reasons to hit targets and to get out and just follow the trends.
I think the term is productive paranoia. And that's why I like having you on, because I'm not a charts guy, but it's a good reality check, right? Because my strategy is always, buy and hold forever. I try to buy companies that I can hold forever when I'm not doing the speculative minor stuff, which I do a lot. But for managing my own money, it's trying to find stuff with a 5 to 10 year time horizon. But I also am very aware of the cost associated with buying near tops, which is why I love talking to you. When I think about traders, right, it just seems like such a hard business. I think like 9 out of 10 traders over the long haul end up losing money. But you have a pretty different approach. It's not like you're buying and selling stocks every day. You probably only make what, maybe 10, 12 trades a year?
Yeah. I do a very different strategy. So it's called asset revesting. It's kind of a different way to look at the market. So for example, the way my strategy looks at the markets is you're either long stocks, bonds, currency, or cash. Those are the four biggest asset classes that money's generally sloshing around. And so if the stock market is trending up, we're long equities. We want to own stocks. And I use just ETFs. And if they're not in favor, if they're going down, we look to move into bonds, or we look to move to the dollar or an inverse dollar ETF. I only trade ETFs. And the best analogy of this is, because I love the ocean, I love to surf and stuff, is the ocean. So we're either in a bullish environment, like a rising tide. When a tide goes up, it lifts all boats. So when the stock market's in a rising tide, we want to hold stocks. It really doesn't matter which ones you hold. You just want to own equities in general. And then, if the tide's going down, just get out of equities. You can buy them back later, right? That's the way I see it. I don't believe in holding something going down. It defeats the point of investing, in my view. And then, if you zoom in a little bit more, think of yourself as like a surfer floating out past the waves breaking. When a surfer's just floating there, sitting on his board, what's he waiting for? He's waiting for a set of waves to roll by. And every year, just as you mentioned, there's like 5 to 12 waves that roll through the stock market or bonds or currencies or cash. There's different waves that roll through it, and including precious metals and stuff like that. And so we can see these sets of waves coming. We have the tools to be like, that is a new wave in the stock market. It has strength. Everything is saying we need to hop on this wave. Let's hit this swell. And the nice thing about riding these big waves is we also know when they're starting to get weaker. So we can be like, hey, this has been a good run. It's coming to an end. It's starting to weaken. Let's lock in profits. Let's move our stop up. And so I just ride these 5 to 12 trades a year with our portfolio. It's really, really simple. You don't have to follow the markets every day. It's an end of day strategy. So our trades, our targets, and our stops run at any time, so they could be hit during the day. But we don't have to make any decisions really on new trades until the markets close and confirm this is a new wave. This is the end of a wave. So that's how I go about it. And it's very different. It's like watching paint dry. If you're an active trader, it feels so slow. You're like, it's not enough trades. That's what I always hear from active traders. Like, it's not active enough. And then I'm stuck in this sweet spot. And then you got these passive investors with advisors or who buy and hold. And they're like, it's way too active for me because I generally do nothing. So I'm in this awkward no man's land, which is why there's big money to be made. There's big money where nobody's at, right? And so I play this really awkward time frame that is, the people I work with and the investors I help who get it, who understand it. I mean, we're in like the perfect storm for navigating market corrections and benefiting from rising markets. And we can just walk through these markets without any big issues, where everybody else is chasing returns or they're riding the roller coaster down with the buy and hold. And we don't have to really worry about any of that.
Well, where can our viewers find more about what you do? Where can they find you online?
Yeah, the best is on YouTube, The Technical Traders, or go to my website, thetechnicaltraders.com. And I manage my own portfolio. That's all I do. And I share exactly my daily analysis, my ETF trades. If you've got a big portfolio, you got a great lifestyle that you like, and you've got a retirement account you want to keep, that's who I can help the most. And we navigate the markets just enough that we can outperform over the long run, the buy and hold strategy, but we don't have the downside risk. And it's a great way to navigate the markets.
Well, I appreciate what you do, Chris. Merry Christmas, and thanks for joining me today. I appreciate it.
Yeah, thanks, Aaron. Always a pleasure. Have a good Christmas.